Our guest is Amarendu Prakash, chairman of the biggest state-run steel maker in India, Steel Authority of India. Welcome to ET Now, Mr. Prakash.
Thank you.
The government has unveiled a safeguard duty of 12%. This is to safeguard the interest of the Indian steel industry and also help the steel industry in the face of the threat of dumping. Do you think that this 12% is an adequate rate?
Steel industry lately has been quite volatile, as you can see, and this investigation for safeguard duty was started based on data of 23-24 and early 24-25. So as you can see, that was the time the duty which has been announced provisionally has only inspected the data of that time, its old times. Since that time, as you can see, we have had US tariffs which have been playing havoc on the markets, and nobody is sure what is going to happen. The tariffs have been announced and repeated, sometimes put on hold. So we need to wait for the dust to settle on these tariffs and to see how the trade flows across the world change. Steel as a commodity, you see, is traded across the world. Steel travels from Asia to India, comes to India, also travels to Europe and US. From Europe, steel travels to US, so it's a frequently traded commodity. To assess the impact of the trade wars, the tariff wars, we'll need to wait for the results before we understand what exactly is the impact of it. Directly, if you ask me what is the impact of US tariffs on Indian steel industry, directly nothing. We don't export much to US. But then Europe exports to US. If Europe exports don't go to US, that means the steel stays in Europe. That will mean the steel traveling from Japan, South Korea, China to Europe will be blocked. And that will mean that steel will have a threat to come to India. So to decide on the duty or decide on exactly what safeguards are required for the Indian steel industry, we will have to wait for.
Yeah, so it is an adequate, reasonable rate in your view. I mean, the DGTR or the government needn't, go for a high rate.
It is a duty which is based on, say, data of June 24.
Right.
So for June 24, it was right. Today, whether it is right or not, we'll have to see how the markets flow.
Right. In terms of sale, there has been a slump in the global steel prices. We have the tariff war. There's a trade war that has erupted after Donald Trump's decision to impose tariffs. As a company, how are you managing and how are you navigating this headwind?
So you see, Indian steel consumption trends, if we see, last 2 years have registered double-digit growth. India is a consumption economy today as far as steel is concerned, as India is trying to grow, and a lot of steel goes into infrastructure. As India tries to become a Viksit Bharat, developed country, steel consumption in India is today probably 98 kg per capita, which is less than half of the world average. The world average is 220 to 230 kg. So there is a lot of scope for increasing consumption in India. Last 2 years, more than double-digit growth has been there, and we feel that this growth is going to continue. So we as steel makers in India feel that India has a big potential to consume more.
Right.
And that is why being able to export to other countries, though the Prime Minister today morning said that we should aim to export 25 million tons. As the market stabilizes, we have the capability, but we will have to see that current market conditions, how they pan.
Right. Prime Minister Modi has unveiled the Viksit Bharat goal by 2047. And also the government is aiming that, steel capacity rise to 300 million tons by 2030. What will be sales contribution in that? How will you
Sale is currently at 20 million ton. We are planning to expand to 35 million ton by 2030. The plans are already afoot. In fact, we are in the market for, and tendering is going on for putting up these plans.
Right. In terms of sales fundraising, do you anticipate any fundraising plans in FY26?
Most of the projects which will be getting on the ground, currently we are finalizing the tender. So on the ground work and the actual cash flow will start in majorly from FY27.
Right. In terms of your capex plans in FY26, take us through that. What amount of capex are you planning to invest in FY26?
Normally in a company of this size, recuperative capex, which is a sustenance capex, is about 4,000 crores per annum. This year our plans are 7,500 crores. So the rest, 3,500 to 4,000 crore goes towards the expansion capex.
Right. Okay. And I also gather that you are going to develop an $800 million plant exclusively to cater to the railways. So you had flagged this plan sometime back, a few months back. So right now, what is the kind of work and what are the kind of timelines for implementing this? And what is the kind of commitment you have from the railways?
You see, railways, we believe very strongly in the India story, the India growth story, and we say that if the economy is going to grow, it is going to require a large amount of logistics. And railways happens to be the primary logistics partner in the country for all players. So we are sure, we are confident that railways have to expand. And that is what gives us the confidence to announce a rail mill without even, without getting a commitment from railways. We believe that we can supply rails and there is going to be growth, and so we have decided to put up a rail mill.
Right.
We are in the process of final approvals and we'll be going ahead with that.
Where's the mill coming up?
It's in Bhilai. It's going to be in Bhilai.
In Bhilai, yeah. And currently, your plant in Bhilai, Durgapur, are you looking to ramp up your capacity, expanding the facilities there?
Is primarily in Bhadpur, Bokaro, Durgapur and Rourkela. These are the 4 plants slated for this. In Bhilai, we are ramping up the iron ore production first. We have got a new mine which we are trying to streamline. Once the iron ore capacity increases there, then we will be planning expansion there also.
The government has also unveiled a policy where they want that the raw materials for local steel companies can be easily sourced. They're open to allowing steel companies to, acquire mines overseas. What will be sales strategy over there? Are you looking to acquire mines overseas? Are you in discussions with any players overseas?
So, 2-3 input materials for the steel sector are, one is primarily of course iron ore, but then in iron ore India is self-sufficient. India has got adequate stocks of iron ore, adequate mines. So we are not looking at iron ore abroad. However, coal primarily comes from outside, so about 80 to 90% of our coal requirements are met from international markets. Currently, we have a 2 million ton operations in Mozambique, which is owned by us. We are planning to double that capacity in Mozambique. We keep scanning the market to see if some interesting assets become available in the market, be it in Australia or in Indonesia or in other countries. We are quite open to evaluating the options and putting a stake.
Yeah. What will be your goals for FY26? How do you see SAIL expanding? What will be your vision?
FY26, I'll say for the steel industry, 1 year is a near-term option. So in near terms, we are planning, based on the production that we had in the previous year, we are planning 8% production growth from the existing assets. We are trying to sweat the assets to achieve 104 to 105% capacity utilization. At the same time, the projects that we have announced, we plan to put them on the ground, and we are conscious of the fact that these projects have to run like clockwork and be commissioned on time. So that's a primary.
Yeah, and you see a recovery in global steel prices and particularly the domestic prices?
We hope so. We hope so.
You're optimistic about it?
Yeah. See, the only thing which is keeping global prices, disturbing the global prices is some countries have extra capacity and no consumption. And so steel is getting sold at less than cost, which is something that will be unfair for any market. So we are not against imports, or we are not saying that we are not competitive and we need a production. We feel that we just need a level playing field, that where nobody is trying to sell below cost. If that is the scenario, we are fine with it.
Thanks for speaking to us at ET Now.
Thank you so much.